Let's get more now on what to do with your dollars. And joining us from Princeton, New Jersey, we have the esteemed BlackRock's Vice Chairman and Chief Equity Strategist, Bob Dahl. And Bob helps to oversee $3.2 trillion in assets. Bob, hope you're enjoying your autumn in New Jersey. What's going on with the markets these days? You know, we heard from the FOMC talking about sluggish growth, possible deflation. They said that price stability, not in the cards just yet. But you, in the past, said the double dip off the cards.
Yeah, I don't think so. I think, as you correctly point out, the last day or two have been a little sloppy, but so far in September, markets are up nicely in equities. And I think that reflects the fact that the news out of the U.S. has turned from not so good to, I'm just going to say, less bad. And because portfolios have been positioned for worse news, I think this less bad phase that we're in is encouraging people to put on a little bit more risk. Eventually, we need good news to sustain an up market, but we're not there yet.
Okay, less bad news. What about people and investors hoping that it'll get less bad if the Fed injects more cash into the markets? I mean, judging from the statements yesterday and the reaction, I think investors are looking for more expansion of the Fed balance sheet. Do you think they're getting it? They're going to get it? Or are they just over-optimistic?
No, I think that the Fed went pretty far out on a limb yesterday to say that unless things improve, they weren't quite that direct. They'll be in with quantitative easing 2, so-called QE2, before long, probably next meeting. The Fed basically said in its statement, we want more real growth. They've been saying that all along. But as you also saw, they said for the first time, we want a little bit more inflation. And so basically, you put the two together, they want more nominal growth. They want a nominal GDP to grow a little bit faster, and that's good news for equities if they can accomplish that.
Okay, now speaking of equities, Bob, I got to be honest with you. Back in June or so, when we were speaking, you were talking about advances for stocks in the U.S. I was still scratching my head back then. So were a lot of investors trying to ride out the volatile ride in the markets. But now it looks like equities are on course to finish 2010 a little bit higher. I think you still have a peg of 1,200 for the S&P 500 at year's end.
We do, and of course, Susan, that will require a decent fourth quarter, which means the double dip word needs to continue to recede from our vocabulary. We need a little bit more confidence. Maybe the elections provide that. Some more understanding where taxes are going to go in the U.S., and we can put some of that together along with another decent earnings quarter to be reported before long. Then I think we have the recipe for, I'm going to call it a grind higher market.
Okay, a grind higher market, meaning slow and minimal gains throughout the next 3 months. Is that right? It's not going to be a big pop upwards.
Yeah, I think it's going to be slow and steady. Look, we still have a lot of economic issues and slow growth to deal with, as you well know. But if we continue to get evidence that we are muddling through as opposed to double dipping, I think that's enough to get some more gains out of risk assets and equities in particular.
Hey, Bob, you talked about the elections. Let me just get your thoughts on the news today that Rahm Emanuel, the White House chief of staff, might be leaving for his own election campaign to run for the mayor of Chicago. So this makes, I think, for Peter Orstag, Larry Summers yesterday, Christina Romer, the mass exodus from the Obama administration. What does this say to you? Do you think the U.S. president and his team are in some trouble here?
Well, I think there's no question Rahm Emanuel for a long time has had his eye on mayor of Chicago, and this is an opportunity. So I think that's a bit of a one-off. I think that would have happened no matter what once the opportunity for mayor of Chicago came up. The other three are absolutely right. They're the economics team, or parts of it. And given the difficulty with the economy, given the difficulty of getting the economy to have sustainable recovery, I think the administration, the president himself is saying, you know, I've got to make some changes to show the American people that I want to move forward. And unfortunately, casualties in the area of weakness tend to happen, so we should not be surprised. Perhaps we should be surprised that it's before the midterm elections, but nevertheless, between here and the end of the year, I suspect you'll see a few more departures.
Okay, Bob, quickly, I want to get your thoughts on the yuan as well. You mentioned this term trade scapegoating. How does that apply to the yuan and what the U.S. politicians are trying to push China to do?
Yeah, I think we have to be real careful all around the world not to beggar thy neighbor and try to cheapen our currency on the back of everybody else in order to try to grow. And in this particular relationship, I would argue China, the U.S., perhaps the most important trade relationship in the world. Both countries need each other and they need to play nice. So we got to keep our eye on the U.S. Congress or anybody else working on protectionist sorts of things around trade. That would not be great news for world cooperation and for world growth.
Okay, thanks for playing nice today, Bob. Always good to see you. Thanks for that, Bob Dahl of
Have a good one.
BlackRock.